follow my video earlier on. If you haven't watched the video earlier on, do watch that first and then check this out. But I just thought following that, I would look at TA. I've kind of knew this stage was maybe coming. We've been talking about it. So we withdrew these levels. I'm now looking, unfortunately, to the next lower levels. And I'm going to look for positives as well, of course. But I feel that I need to prepare for the next stage. So I know what I'm doing now. We'll have a quick recap of that and what the plan is going forward. So to start this off, I'm going to look at Bitcoin. Bitcoin on firstly the weekly chart, we are respecting the 200-day moving average. This is my 180, which is I normally work off, but I put the 200 on for the purposes of this. So the 200, yeah, it looks like we've touched the wick on it and we've bounced up by about $1,000. So a bit of a recovery there, but I don't know. It's historically respected or pretty much all the time. You're going back even February 19 when it sort of touched it, but it did bounce off it. So potentially that could be what happens. We can see it here, respected it enough, touched it, and it rallied on. So look, you could look at that as your positive, and it very well could be that scenario that plays out. But if I've turned on the volume thing, which is what I did in the last video, there you go. We can see there's no volume, and people weren't buying at these levels, so it just tells me that it'll just fall right down until we get into a better level, which is going to be in and around this sort of 19,000-20,000 area. Unfortunately, we can see now that we are well below all our averages, as we have been for a good while. And again, the no volume area concerns me. I think we'll just fall right down to this level right here. And then we'll look at the other indicators, but chances are it's going to go down to 12. Nice. So that's Bitcoin. I don't know why the volume thing's not working here. It should be telling me what the friggin' volume is, but it's not. So that's good. Look, there it is now for some reason. So you can see here why I believe the 20,000 could hold up a bit. We've got nice touches before here, good strength. Then the volume comes in, good bit of buying power here. So that could hold. This range, let's just say between sort of 17 to 20, that range could be some sort of area of, decent bounce back. Then you've got good, decent support for sort of around that 13,000 range. So I'd be stunned, and look at this volume here. Truly stunned if we see any lower than 10 grand. And I think that is worst case scenario. So whether people buy into that, I mean, like I said, if you're branding now at 23, you could be 50% down on your money very easily. So I would tread carefully. I'm maybe going to roll the dice. Probably am going to roll the dice at 20,000 ish. If the rest of the indicators are kind of on side for a flip, for a reversal, and the idea will be take stop losses for a swing, and if it goes Pete Tong, it goes Pete Tong. I'm more than happy buying at 20,000. As I said, I believe by 2024 it'll be 100 grand. Unless Bitcoin gets wiped off the face of the earth, which would mean saying that there's no more crypto, and I just truly don't believe that something that has this much power, big companies are using, adopting cryptocurrency as payment. You've got all the NFT spin-offs, the benefits of that, people enjoying that. There's a market there. I'd just be stunned if it's over, So rightly or wrongly, I believe that Bitcoin crypto is here to stay, and with that, then it has to go to 100 grand by 2024. So I could be wrong. Do your own due diligence. But I'm buying it, and I'm going here. If 20,000 I'm wrong, it goes down to 10,000. I'll take a loss on that. So be it, because I think the potential to 5x your money in the next couple of years is there. So that's my thoughts on Bitcoin and crypto. So SQQ then, it's been the winner for us. We've been in it since the 6th of April when we did the video, and let's just see where we're up roughly on that. Yeah, we're up about 90% on that. So like that's been good. Not huge money in it, unfortunately. It was only a hedge, but it helps. Again, just keeping that running. Just going to keep it running. I don't see the point. We're out of all these commodities. We're in a lot of these. Bit of regret on the oil. I mean, that has continued just to rise, but I'm okay with it, and I'm not prepared to jump into it. Gold, I'm surprised with gold. I thought gold would have been a good hedge. I thought that might have done pretty well. I mean, it has done well, and you'd be better off in gold than the majority of stocks right now, but it's not done that good. TLT's just been a friggin' horror show. I really don't get TLT. I feel like I must have got this wrong. I just thought bonds were good. I did a bit of due diligence. I thought TLT, it was a bit of a hedge at the end of the day. It's not huge money in it, so I'm not that bothered, and I'm just going to continue holding it. I just feel like that has to come around, and you can see here, obviously, it's massively oversold, and on what goes round or what goes down will go up again. So yeah, I'm just leaving that. But I am surprised at how that's performed, which just tells me that there really isn't a lot of things that you can escape. Hence why I've been doing a lot of Forex trading, because the Forex, there's always winners. That's the good thing about Forex. There's always winners, and you can short. So I've been enjoying Forex. Look at that. You know, look at all these winners you could be jumping on, you know. Where there really isn't much in anything else other than shorting, and I just don't love shorting. So let's have a look at. We looked at that already. Yeah, so I suppose the S&P then, if we just look at the S&P as entirety, just to look at levels of support again then. So let's see. So we drew this line, and this was the general direction I was going to go, just to throw out in the Discord saying that I'm not buying into this rebound we're getting. It's going to go back down. And it has. It's went back down, and I'm not surprised by that. So again, my thoughts, if you've watched my video, were the market bottom, and I would recommend watching that, because I do feel that that's a decent video, and it tells you I'm looking for, Jesus man, I'm looking for about 37, 38%, possibly even 43%. This is the type of range maybe around here, based on previous markets, previous recessions, previous drops. These are the levels really that it has to go to, and you can see here, even if you did get a sort of 35% pullback, the levels of volume support all around this area, going way back, way back. 2018, that's what year's that? I can't even see. Again, 2018, you're going way back to January 18, wiping out over 4 years. 4 years of gains, and by the time maybe we get down to these levels, it's not going to happen overnight. It could be 5 years of gains maybe. Jesus, it's scary. Like, the watch list, one hell of a giving on the watch list. Let's look at our long holes, will we? Let's see. So we've got Tesla Dream. One hell of a giving on that Tesla Dream. Tesla Dream's really been a horror show, hasn't it? We know how we played this. Unfortunately, we've not played this too well. Played with the heart more so than the brain on this one. Unfortunately, jumped in on got out of earnings, which was shrewd. Good move. Patted myself in the back for it. Then it shot up, and I got caught up in it, and I put substantial enough point, like a good position size, straight off the bat. Again, I always had money in Tesla, so it wasn't like, oh, you bought a bad time. I did sell, and I got back in roughly about the same price again. So it is what it is, but the fact is, I sold a lot of profit, so my green line percentage gains was gone, and then I buy back in. So I was straight away, I was down on it, and I'm trying to dig myself out of it, and I'm sure, and I think my plan is to stick to buying and digging out of Tesla. Let's just bring this up for a closer look. And so this is the way it's going to go. It wasn't proper TA, but we had already drew these levels. The 630, put in the Discord, try to buy at 630. Didn't go through, unfortunately. Or maybe fortunately, we'll see what way it goes tomorrow. It could easily fall down lower, but we're at 650 now, and yeah, I wouldn't be surprised if we seen 580. And again, scary to say, but that is the reality of it. And we can see here where the volume starts to play in. There is good buying, but it kind of ends here, which is pretty concerning, because then you're looking at, right down to 460. So guys, I'm drawing another line, because this becomes a level that I'd be looking at, 470. So 630, which is pretty much what we've seen today, 580, and then I'd be looking at 470. And again, a bit like the Bitcoin, what an opportunity. Really, seriously, what an opportunity. It's just heartbreaking that you're taking losses. You're hurting, you just go, oh, if only I had a bought at this time or whatever. But you can't live your life like that. And it's a case of, I shouldn't say it. It's not. I don't think it's politically correct anymore. But if my aunt had balls, she'd be my uncle, is the saying. You can't say ifs. You can't live like that. So we're playing the game, and yeah, that's brutal, Tesla. But that's the reality. So let's see the next one. Well, we'll look at Apple firstly, because that's the short. That's the other short that I've got. I'm only shorting one stock, and it's Apple, apart from the indices. And the reason being, again, all in our previous video, so I'm not gonna talk about that anymore. The sun is driving me insane here, by the way, beat me right up the face. But I could get up and move, but I can't be arsed. So let's see. I talked about the levels on Apple before as well. This is a decent level for Apple. And you can see here a good bit of strong support, but it's hanging on. But this is a bit more harder to call. This is one that I feel, if the whole market is that bad, Apple will just get dragged down. Even if it is strong, I think it'll get dragged down. And rightly or wrongly, I'm going to play that game. But it's such a strong stock. I mean, it's a bit of a bold call, in my opinion, to be saying that Apple could pull back, 30% odd. But we'll see. But here's the thing. Here is the thing. There's not a lot of support in and around these levels, but I mean, is it imaginable? Could it possibly fall that low? Like, I mean, that's a big bold call. Could it possibly fall 56%? And the answer is yes. It really could, but that's not a new target for me. That's just something that I guess you have to think about. But I'm looking at these levels and I'm going, yeah, that's where I'm looking for. We should see it fall down another sort of 14%. And that would roughly be about a 35% drop, in line with the TA that we done in the S&P. And Apple is so strong, it holds over 7% of the weight of the S&P. So I just fancy it to hold up at those kind of levels. But I'm basing everything on the average pullback. I don't want to be completely bearish, but this could be the worst gaping of all time. History is there to be broken or be rewrote, I suppose. Make history, as they say, history makers, and this could be an history making period. It's unprecedented in so many ways. It always has been. We've been saying it on the channel for the whole time, and I've been saying it for years. Even outside of that, these are incredibly unheard of times. Just as simple as that. The pandemic, the funding, the stimulus checks, everything that propped all that up. The crazy demand for houses, and the housing market has been shot all up, and just all these things that have happened, and new ways of working, and people not working fully, and people going off sick and COVID, and then you had all the new job losses that we're having, businesses shutting down, and then we'll have the baby boomers, the people that are sort of retirement age, and that whole. And this is another theory that I have, that these people that have my parents' generation, or all had maybe 3, 4, 5, 6 brothers, big families. My dad's one of 10, big families, where now the generation only has maybe 2 kids. So you've got all these people that are retiring, and there hasn't been enough other people coming in to take the job. So that's why you're seeing, shortage in labour, but full-time employment. What's going on? Well, it's a good thing, yes, that the unemployment figures are very good. That it's a positive, but you just go, there's not enough people to do labour jobs. You're seeing the food shortages, you're seeing the supply issues, and you're just going, there's a lot of bad things still in the pipeline. We've still got the Evergrande, the backlog of that was crazy as well. These things are all catching up, and it's just been one thing after another, horrific. And who's to say that this won't be the worst gaping of all time? That's the reality of it. It's a grim video, boys and girls. It really is not a good video. Let's have a look at Coral Dream. Coral Dream is what it is. It's really no different than what it has been. I'm not even going to talk anymore about it. The big level of support for Coral Dream that you don't want to see it fall through is 0.22. Quite a drop to that level. It's 20%. So that would be raw. I'm very heavily in Coral. It's one of my bigger positions, maybe my third biggest position, or if not number 2. If you count all my crypto, it maybe would be third. But either way, Coral Dream, it's just a dream. You're hoping that the news is going to come. It was a 2030 play, so I'm not really worried too much in terms of this one. It's not nice initially. I would prefer not to have as much money in, a bit more money on the hip, of course. It was more of I've tried to play the last earnings, as you know, didn't work out, and I've been holding since then. But I'm okay with it because I know where it's going to go. I'm really got good conviction, let's just say, on Coda. They're in a good place, and I feel that I think that'll be okay. And the price of commodities and lithium, especially, will continue to rise. So I'm okay with it as a stock, but not good in terms of what I would like it to be doing right now. One hell of a gaping. There's no escaping the gaping today. Look at these things. Glencore solid, 5% down. Jesus. Pram Dream had a horror show today. The good news came out. Well, reasonably good news. The thing is, the news that came out today about Pram is it, it's all stuff that we know, and you're kind of. I think one of the guys, I think it might have been Larry. Shout out to Larry. I think the way he worded it was, the thing is with Prem is you're always left with more questions than answers, and it's true. You kind of knew all that, but what's that mean, kind of thing. So, like, I'm not going to go into. I can't be bothered putting it up and reading it out about it. But in terms of the charts, not good. Gabe pulled down, but like we're well above their 200. Everything's looking good, and there was a bit of positive stuff that came out from Keith again. Shout out to Keith. He put something in about the Facebook group about a deal or £400 million raise of funds, and maybe that will be them buying in to Coda or whatever. We don't know, but there is definitely some catalyst there with Prem and Code that could just shoot these things up. So I'm not selling. I'm not even interested in trying to trade them that much. I really haven't, because of the in market, because the liquidity. Sometimes it's hard to get in and out of trades, as we know. So I'm reluctant to always trade them too much. So yeah, that is what it is. I mean, I've got positions in Matterport. I mean, it's just raw. I'm just raw on Matterport. It's the same as Argo, which we'll get into in a moment. But I've just been bought in at a bad time. Convinced myself VR is going to be brilliant, and I love the insurance claim stuff, and I love the stuff that they're doing inside a bit of the real estate, the cameras, construction sites. It kind of feeds into my natural life, so I'm kind of passionate about it. So I bought it quite a substantial amount in Matterport, but unfortunately, this is one that I got kind of caught off. I bought it in around these levels. I did do a decent top up around this level, but I am significantly down in the region of about 60% on Matterport. It's not a big beer, it's a grand or so, but it's still, it's just raw. You just wish you had trusted yourself and went, no, this is going to get worse, sell. But then you convince yourself that these are long holes that you're passionate about, so I'm going to stick with them, almost in a way of support for them. Like, you kind of root for them, like it's like a football team. And I spent so much money on football tickets and memorabilia that I don't really mind it so much. I kind of give it myself also that as a way of looking at it, going, no, I'm supporting this company, and we're all in it together, and we'll see the end, kind of thing. So rightly or wrongly, that's the attitude I've got to some of these things. But ABML is not so bad, because ABML, I was able to get a nice play out of it recently. As you know, that didn't really play out too well, that falling wedge. But we'll delete that because that was a pile of rubbish, really, wasn't it? But we did do the cup and handle. We read that up, and as you know, it was sold around 170. So that was a great trade. Probably mostly sold it because of the way the market was going. It was like, wow, this is like a lifeline, like a life jacket. So I felt, no, Damien, don't be greedy. We know the way the market's going. And this is one where, although I'm passionate about it, I went, I feel we're up a good bit, kind of came out of nowhere, wee bit against the grain of the market. Don't bite the hand that feeds, So I thought, yeah, we'll take profits, and that's worked out to be shrewd. Still looking, I bought in around these levels, 128. But I've still got some of my original investment that I sold to buy back in, and the level I'm looking for here is 0.6. So until I get to there, I'm okay where I'm at. Coinbase, I don't hold, but I'm worried about Coinbase in terms of what happens if this company goes bust. I have not a huge bear, but I have some of my Bitcoin position in coin, and I'm worried about brokers, and that's something that is actually making me nervous about quite a lot of them. I am nervous. I don't know about trading 212. I don't know what their backing is. I know I've had some pretty poor customer service from them, and I'm just a bit nervous about, like, what happens if they go bust. I know they're FCA regulated. I know I could get my money, but God, could you imagine all that hassle? It just makes me nervous that I've got substantial amount of money in different brokers that are really have only been about for a long or short period of time. Again, another reason why the likes of paying for Hargreaves and Lansdowne's may be better or whatever, but it is what it is. Let me see. So let's have a look at Argo. Don't know what the hell that was. I was wrong, but let's have a look at Argo. Argo, then this is ARB. I remember this dream. I did say, to be fair, that was like a 10% chance of playing out or something stupid. Like I was like, nah, it's not going to play out. Like, but I was trying to be a bit positive on it. Look, level is 18, 20. It could easily fall a good bit more. There's no doubt about it. Which is not good in the slightest. But there is a decent bit of level of support around this sort of level we're at now. So we could see, there's a bit of support there. But unfortunately, it doesn't look too good. This is crossing over. But the RSI does, it is going to an oversold area, so that could potentially rebound. It's so tied in to Bitcoin that I've almost been looking at Bitcoin this past 4 or 5 months now, more so than Argo, just because I'm going, we know what Argo's about. It's a startup. It's only going. They've obviously had issues this month as well with the first month, so it's a long hold, or it was a long hold. I'm in the fortunate enough position that although my balance looks terrible, I'm like, God knows, with today's gauge, Jesus, I'm probably like 70% down on it now. I need to look. Sometimes I don't look. This is better not looking. That's why I've got different accounts. eToro's more my do all my forex trading and all that. I have set up a Saxo account, not actually using it yet. I've deposited like 500 quid to it about a week or so ago, and just like going, just leave it. I wanted to do options trading, but I've been so busy I haven't, and which is a bit gutting because I was going to do Redfin, which is a housing market option. Picking them up for about $10. We'll do some put options on them, believing that would go down for the next year or so, because I think the housing market's going to crash, is going to come, and that's for another day. ARBK then, again, Argo, story doesn't change with nothing to look at. Hasn't been about long enough. It's just never ending hole. Never ending hole. And tied in the Bitcoin. So once Bitcoin makes its mind up, are we falling below 20 or not, I wouldn't be expecting anything too wild and wonderful from them. So that's the video. I'm going to go away now and have a look at some financials. That's another thing that not that I give advice, I would recommend you doing if you're thinking about averaging in, or you're looking at support levels for any of these stocks, or maybe you're looking at the ones that I'm looking at. The majority of the ones I'm talking about, I'm not really worried about financially. I'm okay with ABML. I'm okay with where they're at, and that they've got good support, so I'm okay with them. I'm okay with Coda. I'm okay with Pram. We know the funding's there, and we know the quality of what they have is there. They're not making money anyway. They don't rely on selling anything really as such, so it's not like the story's going to change when we go into recession or hard times come. The demand for lithium is there, and these big companies are going around sniffing, buying the lithium. There are good companies that are, they're not going to go bust. There's always going to be a demand to buy it, is what I'm trying to say. So I'm okay with the miners. I am a bit concerned with Argo. The reason being, I'm just a bit concerned at what happens if Bitcoin goes to 10 grand. I think Peter Wall, in one of his videos or writing of some sort of description, he did say, we're fine as long as Bitcoin's over 20 grand. I still think they're going to be fine. I think they're too new. They've got good people there. They know what they're doing. But I would like to see a couple of good months of mining. I would like some sort of reassurance there from Peter, just on the current state of affairs. He doesn't have to go into even the financials. I just need to hear a passionate enough voice from him to go, it's unfortunate, but our cycle's happening, blah blah blah, we'll be fine, kind of thing. I just need something like that just to give me a wee bit extra security with them. So right now I'm content with Bitcoin doing what it's doing. Hopefully in that time before I need to make a decision on Argo, we get something from Peter Wall. Tesla, not even worried. Elon's came out saying we're going to have issues this quarter, whatever. I believe Tesla's fine. The demand's there. Jesus, the order book's full. The money. What else needs to be said? It's just a waiting game with Tesla. Not in any way concerned. And again, the main reason why that's my main focus, where I'm putting the majority of my money, is because right now the best company in the world, in my opinion, that has the most potential, biggest growth, that is as safe as houses, if you want to say that, is Tesla. So that's why I'm going, no, I have to take that advantage. It's not that I disregard my other long holes or go, they're not worthy of it. It's just you need as much security right now as you can get, and for me, that's Tesla, and it might be an Amazon for you or an Apple or whatever. The big boys, putting money into them is as safe as houses. It's just a matter of time, and you need a lot of your money in those types of things right now, just because these other ones, these more riskier plays, could go bust. You have to think about it. They could go bust. Your money could be gone. You need to look at the contracts they've got, and you need to look at the cash flow. You need to look at the finances, and you need to look at how long can this company run with gapage. How much gaping can these companies take before they just have to fold and throw the towel in. So you have to do your due diligence, guys, on your stocks before buying. And the good thing is right now, people used to throw their money in on random stocks, just on the dream. Oh, this will 10x your money. A lot of YouTubers pumping, the next hot thing or whatever. And I've done my sort of hype videos, clickbait. I hate doing clickbait titles as well, but you have to play this game on YouTube, which sucks. I tried not to do it, but yeah, it is what it is. You have to kind of do it. And I'm sure this video you're watching now had a clickbait title as well, but it is what it is. You've just gotta focus on good companies. You had the opportunity to buy them pump and dumpers. You probably were losing money on them anyway. You now have the opportunity to perhaps, yes, maybe buying Tesla at these prices, you might lose a bit more or whatever, but you have a great opportunity now to be buying companies at great valuations. So yeah, feel stuff. Hang on in there. That is the video. I ramble, hence why you see a lot of editing in my videos, because my videos take forever. But hopefully that's helped people. Like, subscribe, help me grow the channel. If you want to have an idea about swing trading, when to buy and sell, and use these indicators to your advantage, because although it is grim out there, you can short these things, and all you're doing is the opposite. Like I said, if we just even look at the SQQ, we bought this on the 6th of April, and we have read it up to here. And the only time, if you look at the charts, the only time you wouldn't have sold here. If you know the trading strategy, you wouldn't have sold here. Sell symbol came in again, you wouldn't have sold here. The reason being, free one, is that you're waiting for your full candle close below your averages. You're not below them here, not below any of them here. Now you would have been here, could have sold, but I was so confident. Not even that I was so confident. I was so worried that we were going to go down. I needed the hedge, and I was willing to almost take an insurance policy, and that's what that was. It was an insurance policy. I'm going, I will buy this, and I hope that I'm wrong. I hope that I lose on this. And obviously, because I was up at this stage, buying in, I was already up 56%. So at the worst case, if this was to really fall down, I would have cashed out at, whatever average I had. I would have been out of the trade and probably would have walked away with still profit if this was all to turn around, but it hasn't. And unfortunately, I was more confident that it was going to turn around. So we bought more here, and we've just been riding it up. And, it's 83%, and it does not look at this strength here. These things we look at in the course, it goes through it step by step. You know how to do all this, and you get these indicators as well. And it doesn't look like stopping to me. So we'll see. That is the video. Please like, subscribe, as I said. I'll catch you in the next one. Peace.